Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, September 5th, 2024. Markets are closed, and I wanted to get an update out to you, closing market wrap, and start out here. We're just going to look at the equity markets. I'll talk a bit about Broadcom. They reported tonight. We'll get to that one second, but XLF. Been harping on this one lately, started highlighting it, did an extensive video on the financial sector, I believe it was last week, looking for a break of this trend line to trigger a sell signal. So I just wanted to confirm, even though I gave you an update earlier today, I just wanted to confirm that we solidly closed there. We printed a close, so it's official. And, when you break down a trend line, other than grinding around sideways, which is unlikely in my opinion, one of three things happens. Either that's it, you broke down, you're going to go on, hit my targets. Each level here is where I expect a reaction. This is my current preferred, kind of what I call preferred swing target, meaning this is, first support level, probably bounce there, but it's a BOD support, not anything I care to cover. Come on down here, that's probably where you'll get your first reaction, and then here before they really step in and buy it. But again, we'll see. We could just blast on down through there. Like I always say, the charts are dynamic, and so is my analysis. But if I'm correct, then that's going to be a drop of down to the 200-day moving averages in that 40.66 level, a drop of about 11.5%. But what I can tell you definitively, that's a sell signal. And so one of the three things that usually happen, either you break down and never look back, you get your zigs and zags along the way down. You break down, sometimes you back test. I'm not so keen on the steepness of the trend line, because the steeper the trend line, the higher you're going to have to go up to back test it. And if you continue to back test, or you break down and it's a whipsaw, meaning you get back above there. So this is simple. How do you trade it? Wow, Randy, you can do this, that, the other. Yeah, that can do any of those things. But how do you trade it? If you agree, if your analysis or outlook is the same as mine and you think it's coming down here, I probably should actually put that as a zone down there closer to, we'll just leave it there, 40.66. Let's just leave it there for now. And so what did I say? About a 12% drop from the highs, maybe a little 11, 10 from, if you shorted it today. Then like any trade, to come up with your stop loss, at least the way I do it, is you use a favorable RR. Depends on the security, your loss tolerance and preference and all that good stuff. But if you're targeting a 11, 12% drop, you can easily give yourself a 3 or 4% stop loss. That gives you a 3 or 4 to 1 RR. That means it's going to be up here. If you shorted it here, let's say you give yourself a 3.5% stop loss, you're somewhere around 46.50. Somewhere around there, and that means you're risking 1 unit or $1 a loss to make $3 or $4, and that's a favorable RR. If you do that and you do it with discipline, you do it, and again, every trade's different. I have different RRs for different trades based on their probability, the nature of the trade, and all that, or the security. But if you use a favorable risk-reward ratio like that, over time, you don't even have to be right half the time, because you're risking $1 to make 3 or 4, right? Now, if obviously the higher your success rate, the better your long-term performance is going to be. But that's how you come up with the target. And if you say, you know what, Randy, I agree that's a sell signal, but I don't think we're going that low. I think, but I do like your target right here. That's what I'm going to do. And then you have to say, okay, well, all right, so you shorted the breakdown yesterday or today. You're going to go target about a 6.5% drop. So now maybe you want to give yourself a 2.5% stop loss, right? And that's how that works. Okay, so I wanted to just confirm that we did get a solid close below there, and so it's an unmistakable sell signal. Whether it pans out or not, only time will tell. I think it will. I think the odds are going to go up significantly when that BOD level there, that support about 44.19 is taken out, as well as JP Morgan. JP Morgan broke down below its comparable trend line a couple days ago. There was your sell signal there, but it's now on its comparable BOD, or benefit of the doubt. What is that? Again, it's that level I've covered recently quite a bit. Previous reaction highs, you have a breakout. So far, and again, we all see what we want to see. Those glass half full guys or gals, meaning bullish on JP Morgan, what they see, and maybe they'll be right, is a breakout right here, right there, and a back test. And so TA 101. If you're bullish, you buy a breakout of above resistance or breakout to all-time highs, and then if you missed it or you want to add, you buy on a back test with a stop somewhat below. Whereas the glass half empty guys or gals say, okay, well, I've shorted it, or I'm going to short it there on the breakdown, and then I'm going to be cautious because it's a breakout to new highs, so I'm going to wait to add to my short position on a break, a solid move, and especially a daily close back below 216, right? That's how that works. So based on the charts, I favor, again, minimum drop, of about 15%. And as I said earlier, that will almost likely take the S&P and the market down with it. Now, I want to loop back in one of today's earlier posts. Actually, it was the only one I got out to. No, I got you two out today. This one here with the price targets for XLF and the futures for the financial sector, IXM. In there, I said that, and I wanted to reiterate this and also add to it that before, remember the drop that we shorted, we had those bearish engulfing candles when the Nasdaq peaked a couple months ago. We had that sell signal and other trend line breaks put us short. And on the morning of August 5th, I posted before the market even opened, when we were at the lows on the futures, hard out. We hit my 6 target on the futures, the long-term daily chart on the NQ futures. We were at the 200-day moving averages on the indexes, and I said time to go cover all shorts across all accounts, even the long-term stuff, and go long for what might be a potentially a double-digit and explosive rally, and that's what we got. Now, I'm not trying to harp on that. What I'm trying to do here is show you that back then, all along, I continued to reiterate and impress the fact that I was favoring QQQ over S&P 500. I say that because some traders, if you're new to this, you've heard of the S&P, you want to trade SPY or ES or any of the S&P tracking ETFs, or maybe you have money in a 401k. 401ks typically don't have a NASDAQ 100 fund. They typically have an S&P 500 index tracking mutual fund in there, almost every 401k. And so, if you're trying to say, when did I pull the plug and take some money out of that? You're not shorting in your 401k. Most of you aren't. But you might want to sidestep it, get back. That's where this is relevant. And the fact that if you do, there are traders that prefer to trade the ES and S&P 500. As I said earlier, I think, although I clearly favored the NASDAQ 100, said it would most likely outperform the downside, that was based on not just some crazy intuition or whatever. It was based on the technical power. I was looking at the tech sector, the semis, FANGs, NVIDIA. And yet I was bearish on those, but I wasn't bearish or shorting, actually, we did have a pullback, and I take that back, and I did highlight the drop in the financials then, but it wasn't, I was intentionally staying away from the S&P 500. I expected it to fall less, and it did. It fell just under 10%, and the NASDAQ 100 fell 16%, so it outperformed quite a bit. All right, so I already went over that, that. I just wanted to reiterate now that while the S&P may not fall toe-to-toe with the NASDAQ 100 here, I do think it might fall much more in line. It could possibly fall even more. Tech's been beat up a little bit, but there's still more downside. I just want to say that I still very much like the NASDAQ 100 short via NQ or whatever your proxy is, QQQ. But I also do think it's time now for you SPY traders, S&P 500 traders, now that we already had the single largest sector long since peaked. Again, I did that earlier today. I covered with you XLF, which is the the tech sector, bearish engulfing candle, bearish rising wedge breakdown, 101 reasons, solid reasons to be short. We milked every penny, hit the bottom there, reversed, got out, went long, and that's run its course, come full circle. So this is a sector nobody can argue. Time may prove me otherwise, but it peaked along with the market top, and it's down to this day, still down 13%. So you can't argue that one's down, and that's that. Now, in hindsight, not hindsight, only time will tell if this is a top call. I think this is the breakdown I've been waiting for. This is the one kind of one of the legs that the perma bulls out on CNBC and the pundits were talking about. Oh, well, this is just a rotation out of overvalued tech, a little, rotate. It's healthy market rotation. And we're seeing money going into financials making new highs and healthcare and all that. Well, again, financials and healthcare are your second, third largest sectors in the S&P 500, right behind tech. So we now have, to be very clear, the top three sectors making up about about half of the S&P 500, if not more, roughly half, I think, are on sell signals. And so the other takeaway, besides the fact that, if these stick, again, guys, time will tell. Maybe we get a little kickback rally, maybe not. I'm not favoring it. We do need to break the next levels, 44.19 there. We need JP Morgan needs to take out that 216-ish level. It's back testing the breakout right now. But if that happens, the other takeaway is the VIX. So you remember the other day I mentioned right before we had just to kind of recap, kind of if you're new to this or just kind of recapping what's been going on, SPY, we had this recent trading range. Stated the direction we break will most likely be the next trend. Favored a downside break. We broke to the downside, and so far that's been the direction we've been going, but not by much. But we have broken down. And so you can see the bearish crossover in the PPO. So the takeaway here is we were down today in the S&P, and in fact, it was down more than the NASDAQ for the first time in a long time. And again, one day doesn't make a trend, but the NASDAQ closed slightly green, virtually flat, but a little green. I think it was 0.8%, something down, nothing big, but a quarter point in the financials. The S&P 500. But where I wanted to go with that is the VIX. So back the other day, I mentioned the VIX that morning. It was on September 3rd, and the VIX rocked. And we had a big move up. Remember, the VIX, you might not be aware of this, the VIX volatility index, for those not familiar, it's based on the methodology. It's based off put and call buying on the S&P 500. So where I'm going is we had the S&P was down pretty good on Tuesday when it broke down below that trading range, as it should have been. That was a sell signal. QQQ is down more, as it usually is, because at that point, the financials are still hanging in there, right? They broke down yesterday with a follow-through signal today, a solid red candle on XLF. So where I'm going with this is the other day we had a big spike. This is the proxy for you, those of you that don't trade futures. This is the one I've been sharing for you, VIXY. There's others out there. And so you have to go to here. I have to turn off these lines, grab the previous close. So that day from at one point we were up as much as 24%. And again, this was without the financials or healthcare breaking down. They have now broken down. And there was no reaction. In fact, on the contrary, we closed down today in the VIX. So I wanted to point that out. And so what I see is pretty much a value trade there. It's kind of like the arb traders will look for arbitrage situations where there's relative value. Look, either the breakdown fails and we go up and take back the trend lines, or the financials rally tomorrow, maybe on the jobs report. And again, unless the breakdown fails, I'm not going to change my outlook. I just want to say that. Let me repeat that. From both XLV, which is a healthcare sector ETF, and XLY, unless we were to when we regain these trend lines solidly back above those on both of them, that doesn't change my outlook. This is a breakdown. I'm treating it as such. If we back test, that's what that's going to be, and I'll highlight that as an objective add-on or new short entry if you didn't short it yet. But if we come back above here, then I'm going to say, look, that's a failed breakout. That's all it is. Okay, but as of now, it's a solid breakdown, and I just wanted to point that out for you, that VXY, remember this whole move right here, we were long VXY. I posted it as an official trade idea right here. That day, the day before it broke out, I believe it was either the day before or the previous day, right at the lows, and then with an additional or alternative add-on to come on a breakout above the bullish falling wedge pattern. I gave you 6 targets at that time. The day we hit T4 was the day before the market bottomed, and I said, you know what, to be safe, I'm going to close out here officially. It's been my experience that the VIX will usually bottom shortly before, or peak shortly before the stock market. So I don't get greedy. We were up 54% from our entry point there. And it went on the next day, although we stayed short the equity markets. And this is the morning of August 5th, which you recall posted before the market even opened. The futures were at their lows, and they started rallying from there. So the S&P 500, SPY, and QQQ don't even reflect the true lows we covered before that in pre-market. And that was a hard reversal, I called it, meaning close all shorts across all accounts, even long-term, and go to full long position. And so if any of you held on to the VIX, as I said, if you want to target those, that's where you would have been out. At least I would have, if I would have held it there, and that was 100 and something percent move. Now, where am I going with all that? Okay, so the timing was pretty darn good. You either got 50 or 100 something percent. Got out, sidestepped that, or even turned around, shorted it. That's what I did the morning of the 5th. And now we've come full circle. And all this, and actually, if you look at the spot VIX, let me show you something here. So if you recall, there was that whole move in the VIX from, where was it? Where was it? About right here, was about a 400% run. Most of it coming right here towards the tail end of the drop, right? Because nobody believes once the market starts going down, everybody wants to short and cover up and buy puts right there to protect their positions, or to start shorting the market. And that's why the VIX goes crazy, and that's why we're in first. That's why I don't chase it. We get in, we get out. But that was a 400 and something percent run. So where am I going? Keep in mind that not from the lows, from where we bought it. That was on a 10% drop in the S&P 500, or really from the bottom. Remember, the S&P 500, as I said, dropped less than 10% from the highs. So imagine now if my longer term targets on the market play out. And I'm not saying they will. My only guarantee I ever give you on this site is that I'll be wrong, and I'll be wrong a lot. But what I do is I tell you where I think things are going. I'll tell you when I change my outlook if the charts tell me or something else convinces me otherwise. I just wanted to say that even when we did that, I said at the time, I didn't think that was it. I said that was, in my opinion, the initial kind of pre-shock, for whatever you call it, on an earthquake. The initial shot across the bow, initial tremor, with another move coming. So, just try to, again, just have your mind open to it, that if we do go down to my deeper targets, we are going to shoot past there. And I've already given you, additional targets on VIXY for a new trade, for those that did close, because we, officially closed it out there. And again, or that morning of August 5th, with hard out, close out all shorts. To close out all shorts means close out any long in the VIX. A long in the VIX is a short on the market. I think you guys know that. T1, T2, T3. Again, I'll watch the VIX futures and the spot VIX, and may add additional targets, but that would be an even bigger run up there. And even from where we're at right now today, and that's why I'm doing this video. Financials just broke down. We pulled back to support right here. If that third target's hit, that's going to be 115% return. However, if let's say the market and the financials and everything rallies on the jobs number tomorrow, rallies next week, gets back in that trading range, we're going to go down. So it cuts both ways. And you don't want to hold these guys long term. I'll let you know my thoughts if this doesn't go the way I think it does. And I can just tell you now, don't get married to these, especially these ETNs. Over time, you're guaranteed to lose money. It's just the way they work. They have expenses, they roll. Professionals, myself, I trade futures. And what these ETFs do is they buy futures, they put them in a portfolio, they charge a bunch of fees to do it. They got to roll them every month. It's very costly. It's much more efficient for individual traders to trade the VIX futures. But I know a lot of you don't trade futures, so I share this. And hey, there's nothing wrong with these, but you just got to be Johnny on the spot. Just like when you're selling short, You cannot stay late to the party. If August 5th didn't teach you that, and I said hard out, you learn. We had an explosive rally, and that's almost always the case. Look at COVID. Look at any of the big drops. If you're just a few days late, sometimes a day or two late on covering your shorts, then you've given back a lot, sometimes all of your profits. So I love going long. I love going short. But when you're going short, you just can't be the last one, standing when the music stops. Okay, what I want to do, and again, this is somewhat related to where the VIX may be going, where the stock market may be going. I've been covering my targets, my long-term targets quite often, and I go back and forth. If you're new to the site, when I'm talking on daily and weekly charts and long-term targets, using the term long-term swing trade or trend trades, those are trades measured in weeks and quite often months, especially trend trade. Many months, sometimes even years on a trend trade. This is a trend, right? This from here to here is a bullish trend. These are swings. These are corrections and swing trade opportunities. And so I just want to clarify. And then when I get down to the 15-minute charts, that's just active trading stuff. Those trades are measured usually in hours or days when I refer to the term active trading. Okay, so this is long-term stuff. These are my targets. If you're new to right side of the chart, you probably think they're crazy, just uber bearish targets. And as I said, when we start to get down towards this final target, I will most likely be extending additional targets. Why? And if you wonder why or how I could say that, I'm not going to go too deep into it here, but it has everything to do with if we get down there, what it's going to have done to the longer term, the monthly charts at the time and all that. So again, the charts are dynamic, meaning they change on a day-to-day basis. So is my analysis. But what I'm trying to do is just kind of give you that what if you happen to agree that this is a not only possible but likely that we come down this far. Again, that's calling for about almost a 50% drop in the NASDAQ 100. Then what is it going to do to the VIX? That's why you could have potentially explosive gains in the VIX. Or you want to keep it simple. The VIX will burn you if you put too much money, if you don't know what you're doing or you're not nimble. Just shorting the market, and if whether you use futures, QQQ, but one thing I want to add is that these targets were laid out, if you knew in advance before we even got there, based on where, first a call for the top of the market. We hit that right to the top within 1.5% of the top of the range, which I said was my preferred level, because that would then line up the Fibonacci retracement levels with the price targets I've already identified based on price levels. And one thing I'm going to tell you is that if this plays out right, there's a good chance these targets are going to be hit. Let me just take a look at the last time we had long-term targets with almost identical technicals. If you go back to this board here, as I've covered quite a bit, back in late 2021, we were already short. We started having sell signals there. And then the beginning of the year, right in the beginning of January 2022, I gave you the same thing I did in June when the targets I just gave you here, I laid out in June before we even peaked. Long before anybody knew, everybody was bullish. Most people, almost all, especially the folks on TV. Nobody saw bear market coming. Very few did, and so I laid out 3 targets. I'm going to just zoom in here and show you those, and hopefully you can then kind of marry this into your, if your outlook meshes with mine, or I'll just show you where my head is and where these targets come from. So back then, again, all these targets were laid out. I give you 3 targets on January 5th, 2022. So we were fresh off the highs. We had just put a bearish engulfing candle. We had plenty of sell signals and reasons to be short, just exactly like we do now. Virtually identical technical sentiment extremes, everything you name it. The only difference from a fundamental perspective is that we were looking at the Fed hiking cycle coming, And so this was based on anticipation of what is now actually about to happen, which is a recession. And so the macro, the fundamental backdrop was different. But again, I trade off the technicals. So I laid out 3 targets. T1, and they have not been modified at 342.16. T2, I dragged one of these recently, but I'm going to show you the video from that day, and we're going to just look at that real quick. T2 was at 299.15. Hopefully you can see. I'm just going to read it out to you. T2, 299.15, and T3 at that time was my final target and preferred target at 268.30 and or this uptrend line. And you can see what happened. I'm going to play the video. We hit T1. We had a nice double-digit bounce. And when you watch the video, you'll see when we hit T1, this is I drew out the arrows how it would play out, or how I figured it would play out. And that was a bounce off T1, and it was about right here. We bounced twice, checked the 200-day moving averages once we took them out. Then we had the next leg down. We hit T2. We had a reaction there. Then we hit T3. We hit the price level first, which was 268.30 to the button. I think you can see it right here, to the button. Had a double-digit rally that blew the one we just had away. This was I'll measure it for you here. It's a roughly about a 20, almost a 25% rally. And we gamed it just like we gamed that first one with impunity. We went long, and we went long for multiple reasons, including but not limited to T3 being hit. Then what happened? We made a new, marginal new, but then divergent low. Check, almost hit my trend line and hit a perfect tag there. This is effectively when the NASDAQ bottomed, because then it took off. And if we get time, I'll show you. We were long there, repeatedly and persistently long, coming short going into the end of the year, covering, and going long in the beginning of the year. So that's it. So long, 3 targets listed. I listed a potential 4th target with the blue trend line and the 235 level later on. But this is the one, when we hit this one, that was and remained because of the divergent low, the final target there on that first leg down. So let me show you that post here. Okay, this was posted back on January 5th, 2022. Very clear and simple SPY, QQQ, IWM price targets. Again, coming off a bull market. Hopefully, I think the video will be recording here. Let me see if I can drag it up a little bit and make that a little bit bigger. And I'll just play this little part with covering the price targets for you. And as I click play here, it'll go over the audio. I think it's going to record the audio from the video here.
Back to the weekly chart, and then I'll wrap it up here. QQQ for swing traders. Here's where I think we're going to go. T1. And these are rough numbers. It's a weekly chart. You always want to cover a little bit above support, but here's how I think this thing plays out. And this is measured from the highs. 16% drop down to T1. Bounce there, about 342 or so. And then next drop down to about 299, well, call it 300. That would be a 27% drop. And then finally a drop down here to my current final target, which is T3. And that's either this 268-ish support right here. We have some support there. But I also have these long-term trend lines coming into play. And I probably should add T4, potential T4. That would be about 235.33. I didn't measure that down here. I'll do that for you. That's if things get really ugly this year. That'd be about a 42% drop. Pretty aggressive, but look, all it's going to do if we did that is keeps us in a... it'll be called a bear market, but it'll still be a larger secular bull market right there, and it would only take us back to the bull market uptrend line, right? I like this one better. I like that upper trend line at this point in time, but I do have this alternative trend line that comes in lower. For now, look, we're not...
Okay, let me stop it there. Okay, so that was it. That was in. This is it. There's that first kickback rally drawn to which came in right to the, after T1 was hit to the 200-day moving averages. There was the first tag at T3 with that very explosive rally off there. And there was the final target, was that all along my preferred target right there, which is that uppermost trend line. And that's what we hit. So what's my... Well, first of all, there's probably zero traders in the world that could call not just a bear market, but exactly where we're going to go in it. And like I said, the charts to me are pretty compelling. And then also on that, so as you heard, as I said towards the end of that video, and you've heard me say this lately, right? It's funny, where 2 years have passed that point, and I'm saying the same thing on my aggressive calls for stocks and NVDA. I'm calling the semiconductor sector down for a 50% drop. And as I told you the other day, it's simply going to be just a return to a bull market uptrend line. So and I'm saying this for those of you that are new, can't grasp this guy's crazy, 50% drop. Kramer said NVIDIA is going to the moon. They have more orders than they can handle. AI is here to stay. You guys choose who you listen to. And look, I'm not going to, if the semis do this, I'm not going to ride it short up there. But I'm just telling you that everything in the charts, and same thing here. I had, even in that video, if you go on to listen, or actually it was in one of the comment section below that, I think somebody asked about, well, sectors are the best place to be short. And I said in there clearly, my response back in January 2022 was the semis would outperform. And they did. I said I favor the semis. Favor tech for indexes, the NASDAQ 100, and if you want to juice it up even more, the semis should fall more, and they fell 48%, and it was just a return to the trend line, and that's all I'm looking for here. So bigger picture, I kind of digress over to the stocks. We break this uptrend line, we break this support level, and we're going to come down here. And so I'm just trying to show you that I don't think these targets are, to me, they're the targets I see. Whether or not they play out, we'll see. But when everyone on TV is telling you there's no chance of a recession or bear market, like they were back here, just go off the technicals. That's it. That's all I can tell you. I can't tell you these things are going to play out or not. But the takeaway is, if they do, the profit potential is enormous, or the loss avoidance is normal. So it just comes back to just what I started the video with. We do one thing at a time, one stock, one sector. It's like building a case. I often use the whole prosecutor analogy. You're going to court of law. You've got the prosecutor, and somebody's committed a criminal offense. They're innocent until proven guilty beyond a shadow of a doubt. The prosecutor has to build a case. The stronger the case they have, the more evidence they have, the better chance they have of a conviction. So if you look at it for trying to, you're trying to swing down and make huge returns, shorting the market, going along the VIX, shorting semis, or even reversing a bull market, you have to have evidence, and that evidence will. I already have a lot of evidence. That's why I sit here and do these long-winded videos with conviction. But this was an additional check mark. I'm going to have more evidence when that level breaks. I'll have more evidence if we get down here, and then even more once that breaks, because these are just, again, that's an initial target on XLF on a daily time frame. Then I go over to weekly time frame on all my charts, including QQQ, and again, it's going to bring us back down. Let me go to this board here. This is getting messy. These are the same trend lines as before. So we hit that trend line there. That's what I called it down. And my targets right now, where are my targets on QQQ? T7 is at 260, right? So at 260, that brings us down to right about here. It takes us down to the 2022 lows, right? Well, guess what happens, guys, if that target is hit? And this is why I'm trying to tell you how I'm always thinking 5 steps ahead. Now, this all may be moot if we just blow on to new highs and we're in some super bull market, and that's that. But if we get down anywhere close to my final target, which is right here, 260, the 2022 lows. See these primary uptrend lines? I have 2 alternative ones. The yellow is the one I favored. That's the real one. It's the most valid, I think, because it comes off the lows there at the end of the last bear market in 07, 09. And so if we get anywhere close to that T7 level, we're going to have taken out those secular bull market uptrend lines. And the reason I just showed you that video from 2 years ago is I was, where most of you probably like, Randy, you're crazy calling for what was the drop in the NASDAQ again? You're crazy calling for, I had spelled it out even in percentage terms, then 36% drop in the NASDAQ 100 I said in the video 34. That's where I measured it from where we're at. You're crazy that the NASDAQ 100 is going to go down by 34%, and Amazon and all these other targets I had. And remember, including and not limited to NVIDIA, which hit my second target to the button right there, called that one down from the top for a 69% drop. So the thing is, if that happens again, and if NVIDIA gets down here, and more so QQQ, if it gets that seventh target, it's going to have taken out both the primary trend line and then that alternatives like benefit of the doubt trend line, because we're going to be down here, and that's going to have longer term bearish implications. That's going to be, let me see if I have a clean board I can draw it on for you. There it is. Well, I could probably show it to you on the monthly. Hold on one second. Yeah, here it is. All right, there's my monthly chart of QQQ. That's that same, this is the primary trend line at that 2007 to 2008 bear market. Doesn't look like much. S&P and NASDAQ dropped about 55%. There's that trend line. That's the one I was calling us back to right here. And that's all we did. We hit it. And again, so now if we come on down here, we're going to break a major trend line. I know most of you right now can't even grasp the 50% drop I'm calling for. And guys, we may not see that. But if we do, I just want you to be open to the fact that it could be a lot worse than a 50% drop. And that's based on the technicals. And it's the same technicals. If you think it's mere coincidence that, I was able to identify a drop of, 36%, and how it would go down and then where we'd reverse from. And so, and again, I've been doing this for years. It doesn't always play out. Technicals aren't perfect. Neither is my analysis. When I miss something, it's usually that I just didn't see something in the charts. But I'll tell you, the charts are, especially these long-term weekly chart, if you give them enough time, and you look at the signals and you recognize when there's false signals. Sometimes you get it. But that's it. We're just waiting for this on the monthly chart here. This is a very significant monthly uptrend line that has not been violated since right here in those 2022 lows. We had an intra-month break last month, but we closed right back above it. This month, we're red. We're below it now. So if we close where we're at today or lower, especially lower at the end of this month, and to me, it's coming. This is the biggest divergence I've ever seen on the monthly chart. That projects way down here. So I'm going to stop the video now. And I can show you. I said I'd show you. Going back to the beginning of 2022. 2023. That's when the NASDAQ bottomed. Remember, the S&P really bottomed in October. NASDAQ bottomed in October, but then double bottom in January. And every single setup I had, including positioning, was bullish, all up arrows. QQQ, Tesla. I listed Apple and Amazon as my two top picks and biggest positions, overweighting the FANG stocks. Trading plan, recognizing that, hey, even though I was long and expecting a breakout would add to that, that if we went the other way, and there's a great example, guys, just there's another one of those trading range. That's what I was focused on the beginning of the year. And look, long any breakout above that trading range, because that would be the next direction. And that launched the powerful rally that we saw in QQQ back in the beginning. You got to go to daily chart right here. In the beginning of 2023, and to zoom in tight, it was on a 60-minute chart. It must have been this. Where was it? Well, right. Gosh, I'd have to go back. Oh wait, 2022. Where am I at? Oh yeah, you don't see it on the daily because it was here on this 60-minute chart. That's that's the realm of the. I use the big long-term charts, the monthly, weeklies, dailies to formulate the bigger picture where we're likely going, but then you got to drill down to the intraday charts to hone in on the timing if you really want to get in and out, and that's what I like to do here. So that was like I said, we're already long, had plenty of setups on the long side, and that was to just kind of seal the deal. And so just like that current range in SPY, which you got to acknowledge a whipsaw's a whipsaw. There was a little false break that didn't stick, but then we stayed within the range. One little bullish falling wedge breakout first. That was really the catalyst right there for getting long, and that was the next long add-on. All right, I'm going to wrap it up here, get the video out to you. I mentioned Broadcom. Okay, Broadcom isn't NVIDIA, but it is, as I stated, the second biggest semiconductor producer in the U.S. and one of the biggest AI chip producers. And told you that I don't always call a stock up or down before earnings because that's a fool's errand, unless the charts are clearly bullish or bearish, in which case then I'll make my prediction. And this one was down. This was today at the close. They've reported, so I'm going to toggle on the after hours and look where we're at. Look right down. This is technical analysis, never fails to amaze me. They dropped it right down to the uptrend line and that key support I highlighted the other day, and that's where we are right now. So this is to be continued tomorrow and next week. All I can tell you, for those of you that are bullish, you can buy here. It's support. That they buy the pullbacks. This is the primary bull market uptrend line. All right, that's what they've been buying for a long time. It's a trend line I think is going to go sooner than later. So me personally, I'm waiting to see a solid break below there, 143.50, and then the 200 days, all the better. That's going to take it down here, and that's going to put further pressure on the chip sector, which we're currently short and bearish. But again, it's at support. Can't get too bearish until it goes. In fact, really the only trade to be made right now, like I just said, is either cover or short. If you took one into earnings, betting it would go down based on the technicals, or go long, with a stop below. I wouldn't go long. We might bounce tomorrow, next week. Same thing with NVIDIA. NVIDIA is right on that trend line again. Primary bull market uptrend. So watch these two stocks, NVIDIA and Broadcom. And if NVIDIA takes out the trend line, you've got the 200 days and this last chance resort, last chance support. 96.23 below. And then it should be lights out. And on the same day, in the end of late June, when I gave you the targets for the S&P 500 and NASDAQ that I went over earlier in this video, I also gave you targets for NVIDIA. And I'm still, my current final target right now is still T4 here at $33, which, again, I know that's heresy among the NVIDIA bulls, and that's just about everybody out there. That's calling for a 75% drop. But no different from when I was calling for a 69% drop back here. It's close to that. And it's just the nature of this beast. And so hopefully, hopefully I'm right, position-wise. But if nothing else, maybe there's some takeaways for those of you who are new to investing and trading, that just because everybody in the world's bullish and tells you 101 reasons why this stock can only go up because of AI and the amount of orders they have and the backlog of orders and their insane profit margins, know that no sector, very few sectors are as cyclical as the semiconductors. And if that is, again, study the sector, go back in history, look at what all the big chip stocks have done, including the sector, and you'll read up what I said, or you'll see what I said, that finally when the chip sector peaks, there's a glut of chips out there and orders collapse. And then the fundamental story that they're not telling you on CNBC now, they'll start talking about when we're down here as to why the stock, if I'm right, why it's going that far. And, very few will probably, want to stay short when you start going down here. But either way, those are all your targets and where the stock's likely to bounce if and when we get there. So I'm going to stop it here, get the video out to you, and then we'll just see how things go from here. Like I said, tomorrow's Friday. We'll see where Broadcom trades and the rest of the semis based on their earnings. I didn't listen to anything. I don't even know if they've done the call yet. But I'm going to wrap it up here, and we'll pick it up tomorrow. Let's see how those jobs numbers come in tomorrow morning and what the market does. This has been Randy Finney with Right Side of the Chart. Have a great day.